Monday, everybody. Welcome to the Closing Beat. How you doing out there? This is our quick stock market update show where we cover the good, the bad, and the ugly in the stock market and take your questions as well. Do like I always do. I just go through everything, share what information I have for you here today, and then take your questions if you happen to have any. Also, we're playing a game. It's called Guess the Dow. No strings attached. Go to the website, the bottom right-hand corner of your page. Just take a shot. Where do you think the Dow will close next Friday? Closest without going over. We'll send you a $100 gift card. If you're one of our clients, we'll credit your account $100 like our winner last week, who was one of our clients, and we'll be crediting their account. Also, we're doing Jazz Artists of the Week, going back and forth. We do normally like the old school jazz artists. Now we're bringing it back to the current time period here with Marcus Miller. If you've ever heard a guy play the bass, or you're interested in that slap jazz bass kind of thing, you'll like Marcus Miller. He's got a song called Mr. Clean, just to kind of keep with the jazz vibe, not straight all funk today. You know, we'll ease you into it a little bit. Anyways, check that out if you would. Also, we're financial advisors here at Jazz Wealth. Hope you'll check us out at jazzwealth.com. Do appreciate that. And if you need help or anything, you want to move from your current financial advisor who maybe is not teaching you, helping you along, staying in contact, will you? We'll be happy to help you there. Let's take a look at the stock market. Down 44 on the Dow Jones, a little bit lower after hours. Added flat on the S&P. Not really anything happened there. And the NASDAQ added 71. I think you guys catch the drift here. What led the markets higher today? Well, I won't kill you to death with all the topics, all the data there. Big cap stocks, basically. Here's the S&P 500. We're floating around that chop area, kind of indecision land. I'm going to cover some sectors today that are actually also in indecision land to give you an idea of what people are thinking out there. But basically, I mean, it wasn't bad. The market started off lower today and then recovered. If we go to a 5-minute chart, just to show you throughout the day how things happen. We started out the day lower, was sold off all overnight. Europe started to get weak. There was some news out of Germany as well. But we recovered all day long, all the way into lunch, and then just kind of lost our steam. We didn't get the financials into the mix. We didn't get really anything else besides big cap tech and healthcare. And so the markets basically faded away, and you can see after hours even a little bit lower as well. That's the S&P 500. The most of what happened today was FANG plus Microsoft. Last week we did some data points with you on Outside the Virus to kind of show FANG plus Microsoft to see, well, who performs best over the next 30 days and things like that. You might want to check that out. I believe it's also a tweet or on Instagram or something as well. Go over to Instagram if you would. Follow us on Instagram. We're going to share a lot of data with you there to kind of give you an idea of some of the studies and things that we're looking at, and maybe it helps you in a way. Sometimes we do short-term stuff. Sometimes we do longer-term stuff, just so everybody gets a little bit of something they can work with. And also puppies. You know what I mean? We were trying to think, what do we post? Every other financial advisory company's like, retirement is so important. Puppies, right? You gotta have some fun with that too. So some good puppy videos. All right, basically financials couldn't get it going today, and that helped the markets kind of fade into the close there. Covered that. House Democrats are starting to push their new stimulus bill, which does mean recurring payments of the amount of $2,000 for all of you out there. And hey, you know, that's what it is. So they're going to start pushing that. The Republicans at the moment say, absolutely not. We are not doing that. That's just ridiculous. Can't have it. And so that's where you're at. As far as the NASDAQ today, that would be your strongest area. You're going to hear the air, by the way. It's hot. It's Florida, and we're getting into the summertime. I left the air on, so if it's a little noisy, you don't want to see me sweat. All right, so you got the NASDAQ higher on the day. It was your leading area, was the strongest there. 4 of the top 5 stocks that are in the NASDAQ 100 were biotech today. Interestingly, Zoom was your biggest gainer in the NASDAQ 100, up 7.13% if you happen to be paying attention there. The Dow was a little bit weak on the day. Look, you had a couple stocks just dragging you down today. Boeing was the biggest drag on the Dow today, losing 3.39%. American Express in the financial category there, just nothing good happening over there right now. Very much indecision land for financials. American Express now 4.6%. And Caterpillar also lost 3% on the day. Look, if everything's really good out there, then why doesn't everything else come and play along, right? That's what we have there. Anyways, on our FinTip show today, we talked about doing a deep dive into the JETS ETF. It's the airline ETF. So I covered kind of what it's made up of, how it's built, what are some of the other things in there. Did a bit of a deep dive if you're interested in checking that out, or if you're thinking about buying airline stocks for an investment, or maybe you believe they're going to bounce or whatever, but you want to use an ETF. That's the most popular one, and so we covered some of the action there. Maybe even some data you haven't seen before, some extra deep sleuthing type stuff. Hey, while we're here, let's talk about hotel stocks. That's not hotel stocks. We'll come back to that in a second. There you go. It's Monday. Hotel stocks. There you go. So we looked at some of the hotel stocks today. People were looking at airlines, cruise lines, and we thought, what about hotels? Right? They've been reporting earnings there. Obviously, they're not having a great time, some better than others. Well, here you go. Here's a list of 4 hotel stocks: Choice, Hyatt, Hilton, and Marriott. Choice Hotels has performed the best since year to date, basically, is what you're seeing on the screen there. Basically because all of their locations are still open. They're a smaller brand, so they're not the largest overall. Hilton and Hyatt, Marriott are much bigger, but basically they've been more nimble. They've been able to kind of help some of the frontline workers that are coming into towns and helping with the different hospitals and things. They've been able to stay open. They're also smaller, meaning the individual locations are largely individually owned, and so they've been able to adjust faster than some of the corporate locations that have to have new policies and things like that. So Choice Hotels only down 28%, as you can see on the screen there. That's the purple line, versus something like a Marriott, which is your worst performer, down 45%. They also reported earnings today, and I put on there between a 25 and a 28% reduction in their overall profits for the first quarter. Just depends on where you're looking. So a little rough there. You expect it, but there's a list of the performance of the 4 hotel stocks as you look at it. Now, if you're thinking this is something you might be interested in, well, you look in the long term here, zoomed out as far as we could go to keep every stock on the list, actually. And what you find is that the best average return over, well, basically what looks to be about 6 years, best average return is Marriott. It's also the most volatile out of the group, so you got to be prepared for that if that's something you're looking into. Choice Hotels does come in a close second. I also highlighted the annualized returns of each stock there, so you could see it's not a long time period, right? It's only 6 years, so you have to take out, you can't add all of them in if you're going to zoom out, right? Not all these names have been around all that long, so just careful when you're doing your analysis there. But with what little data you've got over the last 6 years, you've got Marriott in first place, Choice in second place, and Hilton in third place. Your underperformer is Hyatt, which is at the bottom in the orange list there. So just something different to share with you. You know, we just try to change it up every day. What helps someone may just not be all that interesting to others, but we're going to keep sharing it with you. On Outside the Virus today, we did a cool survey that Yale put together, the probability of the stock market crashing, and they asked individual investors and they asked institutional investors, what do you think? And there's a huge divergence in between who thinks what, and so we went back in history and looked to see who was right the last time we had an issue there. So maybe check that out on Outside the Virus. We also covered Tesla, well, all kinds of great stuff, Carvana and things like that. So maybe you want to check that out. Let's do the sector breakdown here today. As far as the sectors go, you have 3 of them higher, 8 of them lower. Healthcare, there we go. Healthcare was your best performing index sector on the day. Actually, the only sector that gained over 1% on the day as well. Just a clear leader overall. It was a broad rally. However, when you look inside the healthcare sector and you break them into industries, we started kind of teaching that a little bit last week with you. You're going to find that it's a lot of pharmaceutical companies and biotech. Biotech was the big leader today. Healthcare, or the XLV as you see on the screen here, what this is a broad, just sort of throw them all into one basket type ETF. It's a great way to look at the individual sector if you're also considering investing in the sector. However, you break it down into industries, and there's actually ETFs for that. It's like an never-ending story here. So one way to see that biotech was the big leader today is with an ETF called IBB. This is a biotech NASDAQ-related ETF, and you can see the massive gain to new highs there, up over 4%. That led the way. So that was what also helped the NASDAQ, but helped the healthcare sector as well. You also had some of the other names that stand out in the healthcare space, the healthcare sector. 2.53% on Abbott. You got Merck a little higher, trying a reversal there, about 2%. So if you've got that, good job. And Pfizer starting to wake up a little bit from last Thursday's decline, almost reversing all of it. So pretty interesting there. Just thought I'd dive a little bit deeper than we normally do. Tech stocks, there you go. There's the tech sector on the screen, higher again, of course. Let's look. You got Microsoft in the mix, up 1% on the day. Apple higher as well by 1.5%. These 2 stocks make up 41% of the XLK. Both of them are higher. A couple honorable mentions in the space. Nvidia hitting new 52-week highs there as well. And Salesforce. Well, Nvidia, first of all, Nvidia got an upgrade at Needham later in the day. They went from a $270 price target to $350 price target. That helped boost shares of Nvidia on the day. But I mentioned a second ago, Salesforce. Salesforce getting a little ahead of itself here, up almost 4% on the day. And those are 2 names that kind of stick out aside from the 2 major ones in the overall tech sector, which is the XLK, if you want to play along. Looking at financials, they were the worst performer of the day, down 1.93%. They just can't seem to get anything done. If you look at the XLF, the top 5 holdings in this ETF were lower on the day. The worst included Citigroup, down almost 5%. Yeah, they had a downgraded today. And Bank of America down 4% there as well. Looking at consumer discretionary, XLY, it's up at the 200-day moving average, but because of the drop in consumer staples, which is XLP, there you go, the XLY is now sitting in 4th place as the best performing sector year to date. So if you're just kind of ranking them year to date, you want to take a look and see who's strong, who's not. The consumer discretionary taking over, which is interesting because consumer staples are kind of seen as a defensive type area, right? And consumer discretionary, which is where you spend your discretionary income, if you, assumingly you have some, is taking over 4th place. So it's a close battle there at the moment. That's what you have for that one. Now, undecided sectors. You've got a lot of sectors that are just kind of trading in a sideways range. For example, industrials. For the last month and week-ish, is sideways. Not a whole lot to go on. It's not stronger than the market and holding sideways. It's weaker than the market and holding sideways. That's not a good sign there. Makes you want to look around. As we do look around, you've got transports. Last month and a half or so, trading sideways. Weaker than the market as well. Not able to get anything done. We know financials, right? Weaker over the last month or so. Just snoozing there and weaker than the overall stock market. That's not a good thing. And last one, got to get it right. Basic materials. Right? Not as bad here. This is about, we would call it in line with the market's performance, but basically just trading sideways over the last couple weeks. Not able to get anything done. Certainly something you want to pay attention to if you're looking at how the overall sectors move the market and you're trying to find out if there's broad strength in the market or if it's really focused. Right now, we have really focused strength in the market. Everybody knows it, and we're all good with it for some reason. And basically, it's like this. If you're in a rowboat and you decide to stop rowing and the biggest guy in the rowboat is deciding to keep rowing, that's okay as long as at some point you come back and start rowing. If you let the big guy row too long, he's going to get tired. And when big guys get tired, they're out. They're done, right? They don't take a quick break and get back. They expend all their energy. They're like, I got this. All of a sudden, fading away. So it's not a bad thing that the other sectors aren't participating, so long as they come in and play at some point, right? So for now, that's why you have sectors trading sideways. They're taking a break. We don't know if they're coming back yet. Some of them don't look like they're going to, but that's where you stand. All right, if we look at the price of gold, gold finished lower on the day by basically 1%. Here's an interesting one for you. I'm going to stop on this for a second. I get a lot of questions about gold, and to me, there's a short-term focus and there's a long-term focus, right? One is better than the other, and I want to kind of illustrate this. What JP Morgan said today, told their customers, hey, worried about inflation, right? Maybe a little disinflation at first, then going into some inflation, and because of that, we think you should own gold. So that's their view, but they're not saying right now, and a lot of the retail traders see things like that, and they go, well, now's the time to buy gold. Hold on a second, right? Let's just use some data. This is not going to be my opinion. Let's just use some data here. I'll put it on the screen. What you see, don't let it scare you. You got in purple the price of gold in US dollars as of today. And then in orange, or whatever that is, you've got the 10-year yield. And so let me explain how this works. So what JP Morgan said is basically when the yield moves lower, the price of gold moves higher, and they expect that the yield will continue to stay low, if not go lower or negative even. And so because of that, they think you should buy gold. Here's the problem with that. In the short term, not necessarily a good time to buy gold. What you see at the bottom is it's going to be a little bit odd because I can't actually plot this with the 10-year rate, so I had to use the TLT ETF. So we're going to look at this upside down. So if you're very familiar with how this works, don't make fun of me. This is how I had to make it work today. What we're looking at the bottom is the correlation of gold to the 10-year yield, or in this case, almost the 20-year using the TLT. All I want you to see is that when the line is higher, if this is all you get, when the line is higher down here at the bottom, I'll put the little cursor there. There you go. What it means is they are not correlated. Typically, if you run this sort of thing, that would be the height of their correlation, but since we're using the TLT, it's the reverse. So when the line is at highs, there is a divergence in correlation, meaning they're not correlated at the moment. There's something not working together. That's okay. That's what JP Morgan's saying is now that that's happening, they think it's a good buy. However, if you look in the ultra short term, whenever we reach any kind of a peak in terms of the divergence there, gold tends to pull back. Even if only for a couple days. Look at the price of gold up here. Pulls back a little bit until we start becoming more correlated, at least in the short term. So anytime you look at this, you can go over here and look at this. There's a divergence. You can see it on the charts. There's separation between gold and the 10-year yield. That's all I'm illustrating at the bottom there. But Is it the time to buy gold? Look what happened. If you bought it at that point, you really didn't make any progress. There was no sense in buying it. Well, what's happening now? Right now, we've got obviously the 10-year falling apart, right, just as low as it's been, and you've got the price of gold heading higher. In the long term, it may mean that gold is a decent investment, but in the short term, is it time to start that position in gold? And we could argue by looking back at history, even if it looks sloppy to you, we could argue that in the short term, you want to wait for gold to pull back. Doesn't have to be a large pullback or collapse or crash or anything like that, but you're seeing that there is currently a huge divergence in the correlation, which is good for the long term, but in the short term, pick your moments. Let weakness settle in first before you decide to take the trade there. Let me know in the comments below or something. Did I mess you up there? I debated showing this because I had to use the TLT, and normally it would be much easier because it'd be inverted. But the bottom line is, yep, the divergence is good for the price of gold. Lower 10-year yield equals higher price in gold. The problem is when there's such a spread between the correlation there, you tend to see a pullback in the short term. So just be careful. I don't know. Sometimes I want to share more advanced things, but I don't want to scare the children as well. So that's that. Moving on to the price of oil. We all know what oil is, down just a little bit on the day. Overnight, Saudi Arabia said in June they're going to cut an additional 1 million barrels per day. After all that fighting. They did all this fighting with Russia and everybody else, and now they just kind of put it out there. It wasn't even that big of a deal or didn't make national news. Excuse me, got the virus. It just kind of did nothing. So oil really got no bounce. It tells you that the market participants in oil think that even 1 million barrels a day cut additionally to what they're planning on doing, the 10 million, is just not good enough. They think it should be more. So basically, oil was telling you today that was a meaningless cut in production, and we think we need to see more. I think Saudi Arabia was probably hoping for a different response there. Anyways, that's your sector and commodity breakdown for the day. Let's move on to individual stocks. Couple stocks in the news. Under Armour today trading down on 5 times extra volume there. Under Armour, it's horrible earnings. Not good for them. You can see the volume in the background down 10% on the day. Cardinal Health stands out as a stock that was higher on above average volume. You look at the gray shaded area in the background there. Stock added about 7% on the day. About 3 times average volume there. You might know Dexcom. We've been talking about this one here. Dexcom is joining the S&P 500 tomorrow, actually. The stock was higher by 4% on the day. They're going to take Allergan's place there, and Dexcom trading on about 3 times average volume. People just making the adjustment there to your S&P funds and any mutual funds, things like that. AMC, reportedly, Amazon's looking to buy AMC. This is the movie theater here. They're in trouble, so Amazon might be stepping up to buy them. There's also a British... there's a British theater company. I can't find the name at the moment, but there's multiple potential bidders for this. All rumor. We don't know for sure. Stock was up 30% on the day because of that. AutoNation reported earnings. Not bad, considering what they went through and what every car manufacturer or car sales company is going through. Up about 3% on the day, thanks to a beat on earnings by 19 cents. Boyd Gaming's made it into Barron's over the weekend. Boyd Gaming, Barron's said the company is very well positioned to, basically, you read the whole article, they said they're very well positioned to have the best rebound out of the gaming stocks there, so maybe something to check into. Cody, there you go. COTY is a ticker symbol, down 8% on the day. Looking pretty weak there in the short term. Missed on earnings there. They're selling a position, actually a quite sizable position, to KKR, private equity firm there, to raise some money. Oops. There we go. General Mills raises its guidelines, raises its forecast for organic sales, meaning just normal organic sales they don't have to pay for or advertise for. They raised their guideline expectations there. Stock was up 2%, darn near hit new 52-week highs. Did you catch Tesla? Old Elon Musk tweeting that he's leaving California. It wasn't a threat. He actually said, we are leaving. So if you read the tweet, the media said, oh, he's threatening California. I don't know. Elon Musk said, we are leaving California. We will be moving. Those are, his tweet was exact. It wasn't like, we're thinking about it, or if you don't treat us differently, we're going to. He said, we're leaving. And if we consider keeping that plant in California, we want to be treated a little bit better. Whatever side you land on that one, I just think it's kind of fascinating news that that's the case. United Airlines down 5, almost 6% on the day. There's been a lot of companies that have been raising money lately, a lot of them. I mean, just across the board there. United Airlines was trying to raise $2.25 billion. They had to cancel it. This is the first we've seen of that. Normally, we've seen Carnival and Royal Caribbean and hotel companies and auto companies. They've been going out there, Boeing, trying to raise money and finding that there's such a severe demand to participate in this from retail investors, from institutional investors. People want to buy their debt or convertible notes or whatever they did. This is the first one where United said, we have to cancel. We were going to try to raise $2.25 billion. Nobody wants it. Right? There's a very, very low demand for our debt, and so we have to move on. We have to find other ideas. You know what that means? It means they have to pay more for the financing. So it's probably going to find out about that in the next couple days. All right, you had 18 new highs on the day. You got Fastenal hitting new 52-week highs. Now it is the 5th best performer in the industrial sector. So we talked about that a minute ago. Industrials kind of flatlining there. Fastenal doing its part. New highs on the day, added almost 2%, and the 5th best performer there. A couple others. You had Chipotle looking good there. They've done a good job through the virus in terms of how they've managed that. ATVI up 3%. That's Activision Blizzard if you're interested. You got a Dollar General in there, blasting off to new 52-week highs. And ServiceNow again, getting a little extended there. You notice the volume dropped off about midday on ServiceNow. I think people were looking at that saying, I like the idea of buying strength, but I don't think I should pay that high of a price. That stood out. Nvidia, we talked about a minute ago, got the upgrade at Needham there. And there was only one new low. It was a financial. Wells Fargo hitting new lows, $24 a share. So for funsies, $24 a share. Let's go 20 years out. There you go. So looking back over here, you've got to go back to 2012, 2011. Yeah, these are 2011 prices here. Here's the financial collapse down here around 10 bucks. Wells Fargo trading just off of the financial crisis lows, 2011, 2010, headed back into that sort of chop area. Looks a little sloppy on the charts, but you get my drift there, what I'm trying to share with you. There you go. Meow. I'm just kidding. I'm just messing with you. We won't do that to you again. I had fun with that one, by the way. I hope you caught that video. All right, earnings coming out tomorrow. Allegiant Airlines, Anthem, Duke Energy, and Ingersoll Rand. A couple others as well. Dividends, you got ExxonMobil, 87 cents. Not bad. Con Edison, very volatile lately, starting to calm down. Going to pay 77 cents. Market Access, which has been a real outperformer lately. It's a company most people don't know what they do. It's fascinating, in my opinion. Their commercials made me look them up years ago. I looked them up. The way they handle the bond market, the technology they have, just fascinating. You got to be into this stuff to check it out. But anyways, Market Access paying out 60 cents. And Xilinx is going to pay out 38 cents this ex-dividend day. Remember, you got Dexcom taking the place of Allergan in the S&P 500. Domino's Pizza taking the place of Capri. And Capri is going to move down to the S&P 600. And I did it. Take a look at that. Covered everything I wanted to take. Not too bad there. I'll take your questions if you happen to have any. See what we can see what we can do for you there. Yep. Should you buy gold? I can't tell you if you should buy gold, but I did outline a pretty good argument to say maybe you want to wait in the short term, but that has to be up to you. Yep. Oh yeah. You want to take a look back there? We talked about his new baby's name on Outside the Virus. I didn't believe it initially. I thought it was just people messing around with the internet. Turns out that's for real. Yeah. How do you say it, by the way? How do you pronounce that? I'd be that teacher that's like, oh, congratulations. What? Oh, for Christ. I'd probably say something I shouldn't. Yeah, some of the names. Reminds me of the old Key and Peele skit, by the way. What's the ETF for gold with Canadian Mint as the custodian? I believe there are Canadian dollar-based gold ETFs. I don't know of any here in the States that have any decent volume. GLD is buying gold in dollar terms, but that was popular for a while. Yeah, buying gold in like North Korea terms. So in other words, converting your money. The ETF would convert for you, but no issues there. Thoughts on ACB's reverse split? They kind of have to, right? Kind of had to. Yeah, up $8. Your chart's going to be messed up for a little bit. Doesn't change anything. Yeah, still had a pretty nasty day after that reverse split, so not probably what they were hoping for. But there you go. Who won the belt? Got a week to go. It's not looking good for me, but we got a week to go, so we'll know by Friday. Remember, it's 2 weeks in between, so we'll see how that goes. California. Oh, really? I didn't know. They're trying to get him to change his kid's name. Maybe that's what he's really frustrated about. Maybe it has nothing to do with manufacturing. I don't know that to be true. I just saw the post there. I'm kind of just looking there. Bitcoin had a pretty rough day, pretty rough weekend, I guess, if you follow Bitcoin, down 13% on the day while it just closed there. Yeah. You don't get the value of it. You could make that argument about a lot of companies they've bought over the years, but they see something there, and maybe it's distribution. It could also have something to do with the Academy Awards. I think Netflix went through this in order to, and don't hold me to this, if it's not the Academy Awards, maybe it's something else. I don't follow this stuff, but in order to win a certain award, like the Academy Awards, your feature films had to have been played in a movie theater. And so Netflix tried to get around the system by airing it in a small theater that they bought in California or somewhere. So maybe that's the play. I'm not smart enough to pretend like I know that, but maybe by having distribution in the terms of their own theaters, they can take their original productions and air them in theaters and therefore be eligible for an award, which gives them credibility, maybe gives them more money. I don't know. That's really just off the top of my head. Thoughts on Tapestry? So Tapestry here in the short term, one of the weaker, call them second tier retailers we've been talking about. I don't see any reason why you would say the stock's been moving sideways, and I think it'll just bounce out of nowhere. These are the kind of stocks I would actually, if you're starting a new position, I would wait to see them bounce first. You don't have to catch the bottom in names like this. If it starts to recover and everything gets good again, people go buy the Coaches and the Kate Spades, those are the brands that they own, then great, but you know, any reason to try to pick the bottom unless you got some kind of inside news you're holding out on. Yep. Oh boy. Go there. Oh boy. Yeah, some of you guys probably, maybe it's the Oscars. For all I know, the Oscars and Academy Awards are the same thing. I don't watch that stuff. I'm pretty simple when it comes to TV, you know, if I watch TV. Can you make stats? Can you make a stats-based video on gold? How does it do over the long? Yeah, I've done that before. That may be a good time to do it again, given what's going on. But I've done that in the past. Gold is a severe underperformer in the long term, and it doesn't pay a dividend or anything. So just careful on that one. I can tell you that. But yeah, I agree. Maybe a good time to revisit that with all that data. Could do that. I love the ideas. Yeah. Cool, cool. And lastly, been buying AT&T. You like that down here? Yeah? Well, I see what you're doing. Uh-huh. All right. You got out of your short trade in the S&P. Yeah. There you go. You called the top for us, right? Now it has to fall. That's like the plight of the trader, right? As soon as you get out, it falls. All right, I'll wrap it up there. I do appreciate it. And we have to figure something out with the questions here because there's a lot of I can't catch up with all of them. I apologize. I hope anybody thinks I'm avoiding you or anything, but how many of us here at Jazz? There's 6 of us. Yeah, 6 of us in total. We're working on getting more people to kind of show their faces and stuff. Slow progress. Slow progress. We'll get there. But hey, enjoy the rest of your day. Thanks for stopping by. I did everything I need to do, and we'll see you later. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.